You make an income. If a business make an income, LLC make an income, it means you make an income, and you will be taxed according to individual rate, like a salaried person or whatsoever. Here comes corporation, which use heavily the accounting information system, or which we'll talk about. So even in our coming lectures, when we talk about the nature of the accounts or how we are doing accounting, so make sure that we are applying accounting standards or accounting subject to this kind of business, which is corporation. So a corporation which is owned by stockholders, and what is the benefit of having corporation? Because you can raise large sums of money, like $10 billion. If you need money of $10 billion, you can ask to the public, and you can say that, okay, you can become our partner. How you get that? You issue the stocks. So there is a law which which govern the company's law. So you basically register your company as a corporation under that state of law, under that state's law. So it has a legal distinct from its owner. So legally, its legality is that the company, the law, in the eyes of law, the corporation, the company is not a company, it is like an individual. If company make a profit, it means company is treated as an individual, company is taxed. And when company reverts the profit to its owner, the shareholder, you receive the money from the company, then your income is increased and you will be taxed separately. Right? Why? Because in the eyes of law, company is just like an individual. Company can own a property. Like Apple Corporation can buy a land, can buy airplane, yachts, whatsoever, hotels, right? Or if somebody want to sue, company can sue. If I want to sue Apple, I won't sue Tim Cook, or Steve Jobs is already dead, so right now it's Tim Cook. So I cannot sue the Tim Cook, or I cannot sue the Bill Gates of Windows company. I can sue only Windows, or I can sue the Apple. Similarly, if Apple company want to sue, for example, Samsung, Apple, do not sue the Samsung company CEO. It sues only Samsung, because in the eyes of law, the company is like an entity, like an individual. It taxed separately. So normally in many countries, the profit tax on companies are 40%, and when the company reverts earning to its owner in the form of dividend, then that dividend is also taxed, right? So we call this dual taxation. I just explained that, right? So corporation, they pay income taxes. So when the when the corporation sends the profit or distribute the profit to the shareholders, so that is also called the income to the shareholders. That is also taxed, right? So we call this dual taxation. So how the company is going to be formed? The shareholders or the owners of the company, they elect representatives or board of directors through an annual general meeting, and they set the policy and they appoint officers. So board of directors, they are responsible for appointing the CEO, CFO, CIO, investment officers, financial officers, like that, and the hiring of the GMs, general managers, or supervisors, whatsoever, and they run the company. So who owns the company? Shareholders. Who run the company? They are the employees of the company. right? So management run the company, and the owners, they are sitting in the house and expect to be received hefty amount of dividends, right? So that's why the nature of this corporation is a little bit different. So in our previous cases in LLC, in partnership and proprietorship, so owners normally they are running the company, right? But in the case of corporations, owners are not running the company, company is running by the employees. So there is agency conflicts. I'm not going into the details. It is basically the subject of introduction to the business. You can just revert to that one, and you can explain, you can get more knowledge how the company is going to be run and what are the management styles. The second learning objective, if you have any question, you can just say that, sir, I don't understand this much, so we can go over there and talk about that. So no more question? Kathleen?
No question.
Ali, Wusong, Fabian?
No questions.
All good.
Okay, Coco, Constance, right? Are you Coco, right? Constance. Okay.
Oh, I think she was going to be at work.
Okay. Good. Okay. So our second learning objective is explain and apply underlying accounting concepts, assumptions, and principles. So accountants, they are professionals. So accountants follow professional frameworks for the measurement and disclosure of financial information. So basically, accountants are those who put all the accounting information into some frameworks so that the person out of the business, outsiders, they can understand it better according to the law. So there are two laws. One is called GAAP, which is generally accepted accounting principles. So most of the US companies, they follow GAAP. And also the other countries, they have their own. For example, GAAP China. It means they modified the GAAP according to the Chinese environment. GAAP Norway, GAAP Pakistan, GAAP India, GAAP Malaysia, GAAP Indonesia. So they have just manipulated according to their own country's environment. And the other one is called the FASB, which is Financial Accounting Standards Board. So which is basically the second, you can say this, the rule or law of governing the accounting information, that how you present those accounting information, right? So FASB and GAAP, there are two laws which you need to follow if you are an accountant. You need to follow to present those reports in a standard format, so that if I'm in Japan, I can compare my company's financial position to the American companies as well, right? For example, the Ford and Toyota, one is Japanese and one is American company, so they can compare. Okay, Ford is doing good or bad, our company is Toyota, whether we are doing good or bad, right? Or I understand exactly the same about the Ford company, even if my country is not the America, or even if my country is American and I'm not sure, or if my point of interest is that this information is coming from automobile industry, even if I have my company which is not an automobile company, which is some food company, right? Even though I can understand whether the automobile company is doing good or bad, or whether this spice company or food company or other electricity company or energy company, they are they are doing good or bad, right? Because all these are businesses, and businesses need to report their financial information so that even a layman can understand, okay, what does it mean by profit, right? So the conceptual foundation of accounting is that the objective is the objective of the accounting is that to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, other creditors in making decisions about providing resources to the company. Fairly lengthy and very typical kind of objective. So the crux is that the objective of the accounting is that to provide information to both its existing users, which are investors, lender, creditors, government entities, and others, and its potential users, the financial information that is. So there are two kind of characteristics that need to be presented in the accounting information. Number one is fundamental qualitative characteristics, and the other one is enhancing qualitative characteristics. So the fundamental qualitative characteristics, they are relevance and faithfulness. What do we mean by relevance? So the information you provided should be relevant, which means it is relevant when I make some decisions. And it helped me to predict or confirm the value. And it should be material. It's not like that, okay, you report a profit and you say that the profit is 3 times. What does it mean by 3 times? Because I cannot understand 3 times. 3 times of what? Right? The profit is 100,000. That is concrete. That is relevant. And that is going to be used in my decision making. Whether if the profit is 100,000, I will invest or not. Right? It means relevant, or also we call this materiality. It should be material. In dollars, 10,000 what? Dollars, yen, or what? It should be dollars, right? So you mention that your profit is in dollars. The second fundamental qualitative characteristic is faithfulness. What does it mean? It should be free from bias. It's not like that you are the manager and so you, if the company make a loss of 10,000 and you present it like that, company is making a profit of $10,000. It is not faithfulness. It should be free from any bias, any error, right? It should focus on economic substance of transaction, events, or circumstances. We'll talk about the negative side of having a fraud when we talk about the fraud stuff. So this will be explained over there. What do we mean by economic substance of transaction? In simple sense, just understand that do not commit, any, you can say that embezzlement or play with the figures.